Hello and welcome back to the Geordie Pig Investor channel, where we delve into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I'll be diving deeper into a very popular company based in the UK. This company pays a very tasty dividend, and in today's video, I'm going to be looking through how the company has been performing and if it's an attractive stock to buy right now. That stock is none other than B&M European Value Retail, stock ticker BME. This has actually been requested by multiple different subscribers, hence why I've decided to do the video on it. So I hope you all enjoy the video and the breakdown in today's video. B&M European Value Retail is a UK-based discount retail operating over 1,100 stores across the UK and France under the B&M and Heron Food brands. The company offers a wide range of products including household goods, toys and food items, focusing on competitive pricing to attract value-conscious consumers. The company's largest segment is in the UK, comprising B&M branded discount retail stores across the United Kingdom. These stores offer a variety of products including groceries, household goods, furniture and toys. The UK Heron Food chain was acquired in 2017. Heron Foods operates a chain of discount convenience stores in the UK, focusing on frozen and chilled food offerings. B&M France was formerly operating under the Babou brand. This segment represents the company's expansion into the French market, offering a similar range of discount retail products as the UK B&M stores offer. Now let's have a little look at some stats to do with B&M. They are in the consumer industry, have a market cap currently at 2.75 billion. They went public in 2014, have over 35,000 employees, have a 2-year dividend growth streak, a 5-year dividend growth rate currently at 19%, and a dividend yield that currently sits at 5.6%. If we have a little look at their 12-month performance, we can see that they are down 48.61% as shown on the graph. Something to note about B&M is they are currently listed as a European stock and not a UK stock. So for us living in the UK, you do have to currently pay 15% withholding tax on any dividends you do receive. This is quite frustrating with it being mainly based in the UK, but there is talk of them potentially relocating so it will be classed as a UK stock, which would make a massive difference to potential dividends you can receive. I know for me personally, it would make the stock a lot more attractive with me being a dividend focused investor if that 15% withholding tax was evaporated. Next up, we're going to have a look at some investment considerations to do with B&M. First up being their management stability and leadership changes. Just last month, B&M announced that CEO Alex Russo will retire on April 30th after 2.5 years in the role. The company is currently searching for a successor, with former Morrison CEO David Potts emerging as a leading candidate. There was bad reaction to this news as the stock price fell over 5% when it was announced, and on top of this, long-serving trading director Bobby Aurora is also set to leave the company this year, raising concerns about potential impacts on strategic direction and the operational continuity going into the future. Another investment consideration is their market conditions and competitive landscape. B&M operates in a discount retail sector which can be sensitive to economic fluctuations. Factors such as consumer confidence, inflation rates, and disposable income levels can significantly affect sales performance. The company faces intense competition from other discount retailers and supermarkets expanding their value ranges. Staying competitive requires continuous adaptation to market trends and consumer preferences. Another investment consideration for B&M is their expansion and growth prospect. B&M continues to grow its store footprint in the UK and France, aiming to capitalize on the demand for discount retail. The success of this expansion strategy is crucial for sustaining long-term growth, so it's a very important factor moving forward. I may add that they actually opened a total of 47 stores last year, so there are now over 740 stores nationwide. They plan to continue expanding this until they have over 1,200 stores nationwide. As well, we've got their shareholder returns. the company declared a special dividend of 15p per ordinary share, amounting to 151 million. This special dividend reflects B&M's strong cash flow generation and commitment to returning value to its shareholders. However, it's important to note that over the past year, B&M shareholders have experienced a total loss of 24%, including dividends. In light of these challenges, B&M is potentially enhancing flexibility in shareholder returns by including the possibility of share buybacks. It's all good receiving special dividends, but not if it means that seeing such a sharp price drop, and also if it's putting more pressure on the company's financials. Does that mean that due to the share price drop, it's a good time to buy right now though? Well, let's have a little look at B&M's financial performance and profitability. We're going to start off by looking at B&M's revenue and earnings. For the fiscal year ending March 30th, 2024, B&M reported total revenue of 5.48 billion, marking a 10% increase from the previous year. The company's gross profit for the same period was 2.035 billion, resulting in a gross margin of approximately 37.1%. And the operating profit stood at 608 million, a 13.6% increase compared to the previous year. They also had a net income for the year of 367 million, reflecting a 5.5% increase from the previous fiscal year. And the company also boasts an industry-leading return on capital exceeding 30%, which underscores its efficient use of resources to generate profits. In summary, while B&M demonstrates strong financial performance and growth potential, investors should remain attentive to leadership transitions, market dynamics, and the broader economic environment when evaluating investment decisions. I know we've just touched on B&M's financial performance, but I also want to look into their numbers for their fundamental analysis. B&M posted a positive net income at 326 million. Positive gross profit at 2.1 billion, positive operating income at 568 million, a good 3-year revenue growth at 5%, fantastic ROE at 42%, solid short and long-term solvency, an average Altman Z-score currently at 2.05, average interest coverage at 4.62. They do have high debt to equity currently at 2.58 and positive net debt at 1.7 billion. Now I'm going to have a look into B&M's free cash flow over the last 10 years. Between 2015 and 2019, B&M's FCF exhibited consistent growth, increasing from 111 million to 212 million. This period reflects the company's expanding operations and efficient cash flow management strategies. Then in 2020, FCF more than doubled to 542.75 million, followed by a further increase to 826.62 million in 2021. This sharp rise can be attributed to heightened consumer demand during the COVID-19 pandemic as shoppers turned to value retailers like B&M for essential goods. Post-pandemic, FCF adjusted to 491 million in 2022. The company's ability to manage inventories and control operating expenses has positively impacted cash flow. Investments in new store openings and infrastructure has influenced FCF. For instance, in 2024, B&M's net capital expenditure was 127 million, up from 87 million in 2023, reflecting its expansion strategy. B&M has maintained a shareholder-friendly approach, distributing dividend that affect net free cash flow. In summary, B&M's free cash flow trajectory over the last decade showcases its robust financial health, strategic growth initiatives, and commitment to delivering value to shareholders. Next up, we're going to have a look at B&M's intrinsic value. Intrinsic value represents the perceived true worth of a company's stock derived from fundamental analysis rather than its current market price. For my intrinsic values, I use the DCF and relative valuation methods to come up with the best, average, and worst case scenarios. When plugging in my numbers, on the worst case scenario they were valued at 469 GBX, on the average case being worth 598 GBX, and on the best case being worth 894 GBX. I not only look at the intrinsic value, but also look at the Wall Street estimates for that particular stock. And the Wall Street estimates over the next 12-month price targets for B&M on the worst case scenario believe they'd be worth 302 GBX, which is a 10% upside on that current price. On the average case, they believed it would be worth 456 GBX, which is a massive 66% upside on that current price. And on the best case scenario, they believed B&M would be worth 672 GBX, which is a 145% upside on that current price. What does this mean? Well, now we can combine the best, average and worst case scenarios to see if B&M is currently trading at an attractive price. Their current price being £2.75. On the worst case scenario, we can see B&M would be valued at £3.85. So with a 10% margin of safety, you'd be looking to buy the stock at £3.46. And with a 20% margin of safety, you'd be looking to buy B&M at £3.07. On the average case price being valued at £5.27. So with a 10% margin of safety, you'd be looking to buy B&M at £4.74. And with a 20% margin of safety, you'd be looking to buy B&M stock at £4.21. And then on the best case scenario being valued at £7.83. So with a 10% margin of safety on this price, you'd be looking to buy them at £7.05. And with a 20% margin of safety on this price, you'd be looking to buy B&M at £6.27. What does this mean for B&M? Is the stock a buy right now? I think that B&M is an attractive investment for UK-based investors due to its strong free cash flow, resilient business model, and commitment to shareholder returns. The company has demonstrated consistent revenue growth, efficient cost management, and a history of special dividends, making it a reliable income-generating stock. Despite short-term fluctuations, B&M value-driven retail models remains well positioned in the UK market, benefiting from strong consumer demand for affordable goods. However, investors should consider potential risks, including competition from other discount retailers, inflationary pressures on supply chains, and the impact of economic downturns on consumer spending. Additionally, while B&M has a solid balance sheet and disciplined expansion strategy, its resilience on physical store growth means future scalability could be slow. Overall, B&M offers strong dividend potential, but investors should monitor macroeconomic conditions and industry competition to assess long-term sustainability. I hope you enjoyed today's video. Thanks for watching this stock analysis. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Do you own this UK dividend-paying stock in your portfolio, or do you want to see more videos like this one? If so, please let me know in the comment section down below. Until next time, keep compounding and stay patient in the market because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.